I remember when I was going to go and get one of my cars and I said to myself, this is how much I want to spend every month. Cool. I said to the guy, this is my budget, but this is the car I want. Now, the car I wanted was a lot lower than the budget. I didn't know this until the guy put through my details, showed me the interest rate. And he was then like, no, like car salesman, of course. He was then like, no, like, come on, man, you could get this car and why you not, you should get more. And I'm thinking, yeah, but this is what I actually came here for. And I thought that's a principle everyone needs to hold on to. But like people used to ask me one question. They used to say, when's the best time to buy, CK? When should I buy? Is now a good time to buy?
It's the number one question in the UK. Is now a good time to buy?
I was at my church the other day.
Welcome to the Takeoff Experience, where I sit down with highly driven people to talk about their journey, their failures, and their successes. If you want to take off in your career, your business, your finances, or your mindset, then this podcast is for you.
Welcome back to the Takeoff Experience. We've got a special guest in the building, my boy CK. How you doing today?
I'm good, bro. Thanks for having me. I'm blessed.
Yeah. I'm just still wondering why you're still wearing that jacket.
I'm cool. Cool and cool.
Yeah, you're proper cool, man. So yeah, how's things been? You're not working at the moment, right?
Yeah, so just to give you a bit of background, I contract.
Okay.
So I'm out of contract at the moment as of the last 2 weeks. And I'm just taking this time to chill. I would have aggressively started applying for roles, but I just thought, let me just chill, enjoy some of this weather we have, work on my own branding stuff. So yeah, man, I'm just taking it easy, bro.
Yeah, I think is a good time, especially the weather that we're getting. This I don't think I remember summer like.
Usually we get it for 2-3 days, but
exactly,
it's different now. And I feel like someone said to me the other day, this is the pro sometimes of contracting. It's the fact that because your pay is so different, you can afford to say stuff like, "Oh, I'm just gonna chill for a little bit." So yeah, man, thankful to God, and yeah, taking it easy.
Love it. You know what? One day I need to do something like that.
Nah, you don't need it. Ato's money's long, Hey, don't listen to this guy. Is too modest. Ato has bread. Don't listen to this guy.
I don't know why I keep on saying this, man. So for the people that haven't heard about you, describe who you are, your background,
cool. Yeah.
What you're doing now.
Yeah, no, of course. So my name's Clarence K, as I say on my Instagram these days, and I have a page called CK Talks Money, which you've mentioned, bro. And in fact, me and Ato met through Instagram.
Yeah.
So we used to do we first did a collab together on investments. This was
This is years ago,
2020.
Yeah.
During lockdown.
Yeah, it was during lockdown.
During lockdown.
Yeah.
And then from then we used to do stuff on Clubhouse. It was Clubhouse, right?
Clubhouse. Yeah. Oh man.
Yeah.
We've been through the ringer.
That's bro, man. That's bro, for real. So yeah. So I work in the financial industry. Across the last 11 years, I've spent about 4 years in retail and business banking. I spent another 4.5 years as a mortgage advisor. So I did mortgages and protection as well.
Yeah.
And then I kind of jumped into the regulatory space. So for those that are listening and don't want to hear my financial jargon, it's kind of like when you review companies' policies and activity against what the regulator, being the FCA, require of us as an organization.
Okay, that's interesting.
Yeah, so that's what I do now. And of course, CK Talks Money as well. That's my baby. So yeah, that's who I am.
Okay, love that. Tell us a little bit about what you got planned for CK Talks Money. That you got. Give us a bit of an inside scoop.
I've got a lot planned, and I get messages a lot like, "Oh, why aren't you putting out videos anymore?" and stuff like that. And I felt as if I needed to kind of take a step back a little bit. It was about 1.5 years of putting out content, and it was great. I met great people. I met a brother for life. So it's I just felt as if I needed to kind of take a step back and think, right, I have this page. This is where I am right now. Where do I want this to really go? Because one thing I find is that when you start a project sometimes, the initial plan you had changes along the way. And that's what I found for myself. So I'm working on a few things. I don't want to disclose too early.
Okay.
The thing is, he knows what they are. But obviously,
yeah, I'm not gonna say.
He knows what they are, but there are things coming. So if you're listening and you haven't followed me before, all the content is still there. I purposely even grouped my content into mortgage stuff and then other financial tips.
Okay, is it that guides thing on Instagram?
Guides, yeah. So if you go on the Instagram guides, you'll see it all there. I'm still open to have conversations around mortgages and if people need assistance and help. So yeah, there's a lot to come with CK Talks Money. There's a lot to come.
How did you actually get into mortgages again? Like, what was your route into it? Yeah,
so I spent 3.5 to 4 years in retail business banking, like I said.
Okay.
And towards the end of that time, I was just graduating from uni. So I was actually working in a bank while I was studying my degree. And I had a colleague who was leaving. And she said to me, she's leaving to become a mortgage broker. And I was thinking, mortgage broker? Like, what's that? And already I was thinking, right, I've already had one promotion. The next role up, I don't even want it. And I also don't want to work in head office. I have no interest in it. You know what I mean?
the dead head office somewhere out of town or something like that. Yeah.
I don't want to catch the train to Holborn every day. I was just like, you know what? I just want to do something where I know I can, similarly to being a personal business banker, have that personal relationship with customers and assist and help people with their financial journey. So she actually, I would say she put me on that because I hadn't met any mortgage advisors prior to ever. I only met the ones that would come into branch sometimes and you give them leads and stuff, but I always had a thing for property. So I then applied for a mortgage role. It was like an entry-level mortgage role where they'll say, right, we're going to pay for your exams. We'll also give you a role. You'll start working with us. So I took it. I applied for it. I got the job and I went into it. The journey I had there was crazy. I actually ended up paying for the exams myself, but we will get to that another day. But long and short, that was August 2015.
Okay.
When I qualified as a mortgage broker. So I did the exam. Some people know them as CMAP. Some did the CII exams. Those are the ones that I did. And it was onwards and upwards from then on.
Yeah.
So, yeah.
Wow. That's mad. Then.
Yeah, man.
What was the reason to leave the mortgage industry?
You know what? Yeah. I did it for 4 years. So, just for clarity, I did it for 3 years employed, 1 year self-employed. And
what, contracting or like?
No, as in business? I was, so when you're own business, so when you're a mortgage advisor, you actually have options. You can either be an employed or a self-employed mortgage advisor. Yeah. You don't always have to work for the company. You can actually have your own business as a subsidiary of the company that you work with.
Okay.
Went down that route. And then I was approached for a role at the Financial Ombudsman.
I mean, yeah.
And I said, well, this is different. It's a bit more corporate, like what I'm used to from banking. It's not mortgages, but this is a chance for me to really bolster up my financial career journey. And I said, you know what? Let me go with it. The money was great. The opportunity was great. I learned a lot. It was a contract. So in the time I was there, it's like you're forced to learn because you're not just doing mortgage stuff or personal banking stuff. You're forced to do everything. So any product that is regulated by the FCA, you now have to increase your knowledge on because someone could call or you can receive an email about anything that goes for car insurance, anything. So it was a great opportunity and I'm glad I took it because that's what helped me pave my way into regulatory work because a lot of what the ombudsman do is heavily reliant on the regulators' requirements and the company's policies and procedures. So that's how I came away from it.
Wow.
Yeah.
What a story. And that's crazy. Man. And onwards and upwards. Do you see like yourself staying in that industry in the regulation side for a long time in the future?
Yeah, I definitely see myself in it, but I feel as if I say that because the money's nice. Okay, I don't say that because I enjoy reading from the FCA handbook or because I love reading about jurisdictions and all this stuff. I don't even like to read WhatsApp messages. So it's like I don't. I would say that I'll do it for a good amount of time,
Yeah.
but my genuine passion is always things that involve me dealing with people.
Okay.
Like I was in banking for 4 years, so 3.5 years, so I'm always dealing with customers.
Yeah.
Then I go into mortgages. I have my own clients. Once again, it's very face to face. It's very personal. Then you kind of go into this space that I'm in now, which is still great. You have your like colleagues and stuff, but you don't actually have anyone else that you deal with. It's just you and your team, and that's it.
Okay.
And
The
part of
factor.
and the thing about CK Talks Money is that my favorite part of it it's not the content creation. It's things like when people can come to me and say, I've got this issue, how can you assist me with it, or just give me some tips, how can I help? I got a message the other day saying, bro, thank you for all your help, like my CCJ's off now, my credit score is this, and stuff like that. It just makes me feel like this is why I started CK Talks Money. It wasn't about recording content with my ring light and then, you know what I'm saying, bro? Like it wasn't that. It was I want to be able to make a difference, and that's literally what it is. So that's the part that really gets me going.
I love that.
Yeah, man.
I love that. And hopefully we can help the listeners today. So we wanted to talk today about there's a new product potentially coming out.
Mm-hmm.
I think it's next year, actually, 2023. I won't name the company that's doing it because this is not a hit piece. Like nothing I do is a hit piece. It's all about discussion. It's all about just trying to understand what it is. So apparently there's going to be this 100% mortgage. I don't think we've seen anything like that for almost 20 years, right? When's the last time you saw 100% mortgage?
The last time I saw 100% mortgage, am I allowed to say companies' names? Can I?
If you want, it's up to you, yeah.
So when I was a broker, there was a lender called Aldermore Bank.
Yeah, they're still about.
They're still about. I don't know if they're still a mortgage lender, but they're still about as a bank. And they were offering an 100% mortgage. But, I'm buying a property. They give me an 100% mortgage. I have a guarantor. You're my guarantor. You own a property. Your property is secured. So if I miss a payment or I go into debt, they can come to you for the money. So if they're using your property and your property ownership as a guarantor for my loan.
That's kind of crazy.
Yeah, so it was advertised as a 100% mortgage, but it wasn't exactly 100% mortgage. It's like when kids want to get car finance and they use their mum or their auntie as a guarantor. And they say, auntie, like I want the 1 series, auntie, please. So they had to sign a document to say, this is what you can do, but if he messes up, it's on you. So that's the only time I've seen that. And then Barclays had a product called Springboard Mortgage.
Yeah, they pulled that.
I think it's actually still there. It's just not that popular.
That.
Yeah, like I think it's actually still around. But in a way, that's an 100% mortgage as well. But someone, once again, using an example, I'm buying, you would put forward my deposit, they would keep it in an account for, let's say, 5 years, of course, making interest on it. And then provided that I make all my payments in the first 5 years and nothing crazy happens, you get your money back. So those are the only 2 prior to the crash that I would say, since the crash, that I would say, yeah, this is a 100% mortgage. But I've read the article for that company and it seems like they're giving out free money. No, I'm joking.
Free money. You're going to make people like start running. Even me, I'm going to be like, yeah, let me see how I can get in on this. But yeah, what's your thoughts on it? I know there's not like a lot of information. So it's going to be 100% mortgage. They don't say like what the interest rate's going to be or anything like that. Yeah. All I do know though is that they do loan people money currently. Mm-hmm. I know that they do it on a fixed interest rate, and it's kind of interesting. They do like it's 5 years in total, and then they'll start charging a variable rate. But the 2 rates are different. So for the first 2 years, I think it's 5.99%. Yeah, and then from year 3 to 5 is 8.99%, which is a little bit high. Obviously, I haven't done the calculation to compare whatever it is. So that's what they're offering right now. So I'm not suggesting that that's what they'll do with the 100% mortgage. We have no clue, right?
They're quite an interesting organization because But I know there'll be a big group of potential home buyers that really appreciate them, because another product that they offer is like, let's say for example, you come to a broker and the broker says, look, you can only afford 250. That's your maximum loan. They have like a booster where they're willing to add an additional amount on top of what your lender's going to give you.
Yeah.
So same way for a help to buy, the government will say you can only lend this, but we'll give you extra. They offer something similar. So purely based off that, then hearing about this product they want to bring in and why they want to bring it in, because they're looking to bring it in, not because they want to scatter the whole property market, but because they're not trying to mess things up. But their approach, from what I understand, is that they're trying to make it easier for people who maybe can't afford, who, let's say they're renting and they're paying rent every month. They can't afford to save that much. That's the market of people they're really trying to take advantage of. So it does really seem like they are here for the first-time buyer. So my view on it, well, it depends how it goes, really, because on one side, it could be a very good idea. But on another side, we've seen what has happened in the past when mortgages have been given at 100% or 125%, as they have been previously. So it's a bit of a tricky one, really, I would say.
Yeah. And what should people look out for? Because I honestly, personally, for me, I'm like, okay, because I think they're going to be offering it to, it's probably to anybody. It's not for first-time buyers, I believe. I think anybody can get, as long as it's your main residence. What would you say people should watch out for? Like, what are some of the flags to look out for?
First thing I'll say is read. I can't even lie.
People don't like to read, man.
Read that one
the fine print.
You have to read. I might even set up a thing on my Instagram where people pay me £200 a session to read it for them. I know that document's going to be
small print.
Mad. I can just deep it now. I can just see it now. But I would say a key thing is really think about the amount you're lending, because I always feel as if when people hear that they're able to borrow a lot. Perfect example. This isn't even property related, but perfect example. I remember when I was going to go and get one of my cars and I said to myself, this is how much I want to spend every month. Cool. I said to the guy, this is my budget, but this is the car I want. Now, the car I wanted was a lot lower than the budget. I didn't know this until the guy put through my details, showed me the interest rate. And he was then like, no, like car salesman, of course. He was then like, no, like, come on, man, you could get this car and why you not, you should get more. And I'm thinking, yeah, but this is what I actually came here for. And I thought that's a principle everyone needs to hold on to, because don't just go absolutely mad and try and max off the whole thing, because and it'll be very easy to do because it's property and people think it's not like a car where it's going to depreciate, but it's a property and people think, oh, the price might go up, this and that. But where this is so fresh and new, I would say just be very sensible with the property price that you plan to buy. When you're thinking about what you want to buy, make sure it's actually what you need and not just you trying to do the madness because you can, So that's what I would say about that. That's one of the biggest advices I would give.
Yeah, it's such a mad thing because, like, firstly, I feel like if it was me, I would try and max it out.
Bro, it's like,
you know what I mean? I would max it out.
Most people,
I would try to. Why wouldn't I?
Yeah.
If I could afford a 5-bed, well, why would I stop?
And this is the thing, and I think this is why knowledge and, once again, reading is very important. Even if you're just reading the news. I read something the other day that said properties have gone down for the first time.
Yeah.
July just gone, properties were down. And I'm thinking, okay, though it wasn't by a massive amount, it was like by 0.1% or something like that. But the fact that has happened is something for people to really look at and to think, right, let's say the properties were 400k. Let's say I get the 100% mortgage on the 400k, for argument's sake. What people need to remember is that when you lend money for a mortgage, there's an interest rate attached to it. So I buy this 400k property and I have an interest rate of, let's say it's 1%. I'm already in negative equity. So my financial situation is reliant on that property going up and also reliant on me keeping up with all my payments. That's why I said also think about the future, because if you know that you are If you're in a stable job, you have stable income, then cool, you might not really have those thoughts. But anything can happen. God forbid you can lose your job, which means you're unable to make your mortgage payments, or you can only make partial payments. Let's say your property price doesn't go up the way that you projected it. So all those podcasts that you were listening to that told you your property is going to go up by 15%. Let's say it doesn't happen. Not Atos though. Ato knows what he's talking about.
Yeah.
Ato comes with the real
I'm
stuff.
conservative.
Yeah, like honestly, because I listen and read so much stuff, and I'm just like, people are making all these wild claims, and no one actually knows what's gonna happen.
We don't know.
Like that's literally the honest. Like people used to ask me one question. They used to say, "When's the best time to buy, CK? When should I buy? Is now a good time to buy?"
It's the number one question in the UK. Is now a good time to buy?
I was at my church the other day doing like a session on like Christians in the workplace. One guy comes to me, "Oh, is now a good time to buy?" I said, "My brother," I said, in front of God in this church, I don't want to lie to you. I can't tell you it is. I can't tell you it isn't. My answer for that is always for people to buy what they can when they're ready. It is literally that simple, because we don't know what's gonna happen. Let's say 6 months ago, what we're talking about, this 100% mortgage thing, it wasn't even a conversation.
No.
If you had asked me that 6 months ago, I would have looked you point blank and said, impossible. No one's ever gonna do that. But we never actually know what's gonna happen. So it's a bit of a balancing thing, you know.
Yeah. You said bears, and it's like there's a few things that I definitely want to address. I think you're right. I was thinking this the other day. I was having this discussion with somebody on Instagram, and it's about balance. I always say this to people. It's about balance.
For real.
Because you just never know what will happen. Like, unfortunately, you can't predict life.
You can't.
Like, I don't know what's gonna. God forbid, I don't know what's gonna happen to me on the way home. You know, illness or whatever. God forbid again. But like you said, it's not about over leveraging yourself, and I feel that's how people get destroyed. Right? We can't predict stuff. You over leverage yourself, and then a crash happens like 2008, and people get wiped out.
Exactly.
Right?
Exactly.
So yeah, I completely agree with what you're saying. I just think it's about balance. I personally, even though I said I would max it out, I'm joking. I wouldn't max it out. No, I wouldn't max it out. I'm joking. I wouldn't max it out. It's not wise to do that. I think you should always leave yourself some breathing room, right? Like if you're paying like half of your salary into your mortgage, that's bad.
This is the thing.
Do you know what I mean? Like, that's
people,
terrible.
But people will justify it and say, "Oh, well, the property price is going to go up." But you don't know that, though.
You don't. It could crash for 10 years. You never know, right? It could be down for 10 years, and now how horrible would that be?
Exactly.
So yeah, I completely agree. And the whole thing about like trying to time the market, we're not wizards. Nobody's a wizard. Like, do you know what I mean? None of us know. Like,
we don't know anything.
You know, so I don't know why people want to pretend that nobody knows is the truth. So it's like you said, it's all about trying to do whatever is within your mean, right? So for me, it's likely that the interest rate is gonna, when I remortgage next year, the interest rate is gonna rise. I'm probably gonna be paying a little bit more. Can I afford it? Yeah, I can, because I did at a point where it was okay, so I can afford to do a bit more. Now, if it goes a bit more, like if it starts doubling, tripling, then okay, it's gonna be peak for everybody, right? Exactly. But yeah, it's a bit of a mad one. Yeah. So okay, so we talked about the negatives. What about like the pros? What do you think are the pros of 0%?
I think a big pro, the biggest pro I would say, is that there are a lot of people that genuinely struggle to save for their deposit. Yeah. And these aren't always people who are on low incomes. Like, I have a friend who earns 60k a year.
Wow.
But because of the way, and he lives at home. Okay. But because of the way he supports his family and stuff, he can't save as much as he would wish to save. And that's quite a unique scenario, but he can't be the only one. You know, there's people who have maybe moved out of their houses, and like we've said previously, they might not have the ability to save as much because they're paying rent or they're paying for a room somewhere. So it's going to really help people who are on high incomes, who actually could afford the mortgage payments but can't save. It's going to give them that chance to say, right, I'm going to step onto the property ladder without a deposit, paying, maybe the same that I was paying for rent, or even less for a property, depending on where you live. So I thought for me, that's the biggest pro. It is going to leverage a lot of people onto the property ladder that are going to be able to buy that maybe couldn't buy before. So, and what kind of goes hand in hand with that? And it's hard for us, even in this conversation, because we don't know what their criteria is.
Yeah, I'm really interested to see when that comes out. Everybody's going to be talking about it, and
because even with, I think it was last week Monday, the Bank of England released that they're looking to scrap affordability checks. Now,
what?
Yeah, like if anyone wants, I think it's either Daily Mail or one of these.
I don't understand.
Publications.
What, when we're going into a recession, are they all right? We're not leaving the recession. We're going in.
Yeah. So just for those that are listening, the affordability checks on the mortgage, they would usually use a stress rate. And what a stress rate is that they would say, right, Atto's interest rate on his mortgage is 1.5. We're going to do a calculation on a rate of 4.5 to see if in the event that interest rates went up by 3%, can Atto still afford to pay this mortgage? Then it all goes through. They look through your income, your outgoings. They might do like a debt to income ratio. These are all the sort of things that go into a mortgage application, which you would have gone through when you made your purchase. So it's like, for them to get rid of that, it kind of makes me think, so what's going to happen then? Because how are they going to vet lending someone 100% of what a property is worth? Because what I think is going to happen, I think that a bulk of these applications will be people taking out the 100k mortgage and trying to rent the property out on the sly. Honestly, I said it to my sister yesterday. I was like, people are going to try and make a buck off this. Like, people are going to say, right, I've got the property now, put some tenants in, or I have a lodger, make some money on the side, because it's like you haven't had to actually invest any of your cash into it.
That's
You're
true.
Still able to get the property.
That is true.
So there's so many ways this could go, but without knowing the criteria, I would just advise everyone to just be on the lookout for what exactly the criteria is when it does come out.
Yeah.
Because until we get that, it's going to be hard to even say whether it's a good idea for some people or not.
Yeah. And I think it's important that they speak to a mortgage advisor. Would you suggest independent to the company? Because I think the company also recommends mortgage advisor.
Yeah.
What do you think about that, actually?
It depends, because with mortgage products, so with mortgage brokers, you have whole of market brokers, then you have mortgage brokers. And the way that I like to explain it, it's like either playing for Man City or it's like playing for Charlton Fleet. Because even if I think Charlton are like League One now. Yeah. Even if Charlton finish top of the league, they're never going to play Champions League football until they come and chill with the big boys. But Man City will play Champions League, they'll play FA Cup, they'll play Premier League. Now, those whole of market brokers, they have access to everything. So if you see a broker and they say we are whole of market, it means they can access every product on the market, while some brokers don't. Now, seeing one of their brokers will most likely be very biased, because they're going to push you towards this new deal. The fact that they've announced this and they're going to release it, it means that they're investing a lot into it. They'll invest a lot into the marketing of it. So whatever they've invested into it, they're going to want that money back. No business releases any project without thinking of a way in which they're going to make their money back. So I would say definitely don't speak to one of their brokers. And if one of their brokers are listening, I'm so sorry. I don't mean to cut into your business. I'll even say it for the camera. Apologies. But I just feel as if you need to speak to someone that's neutral. Yeah. Someone that, whether they put you with them or someone else, they're trying to do what's best for you as a customer. Yeah. Is what I would advise. So, yeah.
I agree. I completely agree. And what CK said, I also apologize. We're not trying to eat into anybody's business. If you're doing your business and it's ethical, like, I'm all for it. Mm-hmm. But like, I think it's about being real with people. You got to be real with people, right? It's not about like, you got to be real with people and just make sure that they have the information that they have. And if they decide that they want to go with them, fine. So I'm all about letting people have informed.
Yeah. And I'm not even saying don't go and see them. Go and see them. Yeah. Like when I've seen people and people have said, oh, but I know I've come to see you as a broker, but my bank so they can offer me this. I'll say to people, go and see your bank, because you need to make sure whatever deal you get is the best for you. So go and see your bank. And if it turns out that the bank offers you something that's extremely and a lot better than what I can offer you, which is rare, by the way, then so be it. But if it turns out not, then come back. And the thing about mortgage rates is not only are they volatile in the way that they change, but banks bring out new products every day. So as we sit here, you could have seen me this morning for an appointment. I could have shown you all the rates available on the market. Halifax might release a new product tomorrow. So it's always good to be sort of up to date with what is being offered and what's out there. So I would say see both. Don't completely ignore their broker.
Yeah.
See their broker.
Yeah.
But then still see somebody else.
Yeah.
Yeah.
It's important. It's very, very important. I was when I bought my property, I was shopping around
You have to.
with lots of different people and make sure that I got the best rate and making sure that I got the money that I wanted as well. I had a specific target of money, and eventually found a broker that helped me find the amount that I wanted. Yeah. It was tough, but we made it in the end. Okay, so we were talking. We touched briefly on like interest rates, right? And you're talking about like mortgage rates. Now they've increased. They've increased a lot. I think what's the Bank of England base rate? I think is 1.75. They're talking about increasing it again. It's gonna be mad. What's your thoughts on that right now? And the impacts on. I know what the impacts are on savings account and that, but on property, from the property mortgage side, what's your thoughts?
I just feel like, firstly, I feel like the rate going up is a bit of a madness. The effect, especially in this market where property purchasing is such a popular thing. You know, it's not as if no one's buying properties. Like everybody that you turn to on the road wants to buy a house, especially if you live in London. Everyone's talking about it, and of course, the increase in that base rate means that lending money becomes more expensive. So in a way, I wouldn't even say from a mortgage advisor perspective, it doesn't make our job harder, but it makes it harder for the person that's looking to buy.
Yeah.
Because as well as having a property price or an area you want to live in, you might have a certain monthly budget that you want to spend on your mortgage every month. So if a couple of months ago, it was going to cost you this much to lend that amount, but now because of the base rate going up, it's going to cost you this. That might completely change your whole financial plan. So that's why, once again, it kind of even confirms even further the way you just said that you shopped around. That's why you need to shop around. You know, like even though as someone who's on the broker side of things, and I don't want to be so biased, but if you have strong relationships, or I've known people to be maybe premier or higher banking customers with their bank and get preferential rates as a result.
Really?
Like, yeah. So
wow,
these are the times where you need to really tap into. I'm telling you, like this is where you need to really tap into what you can, because that interest rate going up, it's simply just making borrowing money more expensive, which means more so that you have to kind of think about what you're buying that bit more than maybe you had to do before.
Yeah.
You know?
Yeah. And the interest rates for like bank accounts, cash ISAs, they're not that great either, to be honest.
They're not, man. And even when, and this is this is a bit random, but my friend told me the other day that his dad put money in a bank in Nigeria and he got like a 7% interest.
What?
And I thought he was joking.
7%.
I said to him, bro, like, I don't think it was the bank your dad gave that money to you, though. I feel like it was something else. Like, you know how some of the man would just be talking rubbish. But he showed me, his dad took a picture, showed me. I said, what's happening over here?
What's happening in Nigeria?
Like, bro, I don't even want to know. But it's like the fact that our answer to making the best of saving for a property is the lifetime ISA. And even that rate is mediocre. I can't lie. It's below average.
It's below average.
The bonus that we get is great, but that's the best that we have.
That's the best that we have.
You know, so it's just, it's just crazy.
Yeah, man. It's a sad life out in the UK right now. I don't know, man. It's tough out here. It's actually tough out here. Like everything, it's like nothing is going well for us at the moment, man. Like, let's be real. Like at least if the interest rates were higher, cool. okay, let the property
At
prices
least
be
it'll
lower.
balance it out. Yeah,
right?
yeah.
But the property prices are higher, interest rates are higher. So it's like, okay.
You know what's funny? Yeah, the fact that remember I came into the mortgage world 2015.
Yeah.
And one of the big pros that we used to make about selling property was that we know. I'm from West London area, so 1-bed flat in Ealing, 400k. Like that's where it was then, and it's only going up. Now a studio is about 400k. And I remember my sales manager at the time saying to me, "Oh yeah, but you need to just make sure people realize that even though properties are a lot more expensive than they used to be, like borrowing has never been so cheap." And honestly, I was giving out mortgages at rates of 1.99%, 1.8%. These are fixed 2-year mortgage rates, and that's across the board. Rates were low. I even remember there was a specialist criteria mortgage HSBC had at the time. The rate was 0.99. Like, this is how low these rates were. So even that whole selling point of property prices are expensive, but lending money's the lowest it's ever been in 20 years, we used to say at the time. But now it's property prices are high, interest rates are increasing.
Yeah.
So it just makes, in my opinion, it actually makes buying a property less and less attractive.
Yeah.
You know?
These days, especially here in the UK, like, I don't know, man. Like, I got my property, but I'm just like, is this where I want to... I might just want to build a house in Nigeria. Let me be real. Do you know what I mean?
Go and sit in Lekki and go and relax.
Exactly.
Brother,
need a holiday home somewhere, right? What about you? So how are you feeling? Because you're planning to buy, right, at some point. How are you feeling about it?
Honestly, a lot of my bubbles have been burst this year, man. Like, especially when I saw the rates going up, I was thinking, I've planned for this. I've literally planned all of this, and the rate going up does slightly change that, you know, because it's like the amounts. So when I used that example earlier, the amount that you want to pay on your mortgage, you then start thinking about, right, if I'm going to really be paying a lot for my mortgage, let me at least buy something that has a bit more longevity, you know. So I was looking at a property at a certain budget in a certain area of London. Whereas if I took that budget 45 minutes up the road, I can get a bigger house. It was flat versus house. That was the conversation me and my mentor were having. And he said to me, look, it's a no-brainer. You have to go for the house. But then my argument was, okay, but the flat gives me convenience now in terms of where things are for me now.
Like location-wise, you mean?
Location-wise, like it's
Yeah.
where my family are, what I'm next to, transport links, and it's a bit of a strange one, but he said to me, look, you need to try and think a bit more long term, because if you can think long term, at least he said when, but I was thinking if things get worse, then at least your long term planning can hopefully balance things out, which does work sometimes. So for me, it's like I offered on a property last year, went to bed one night and I said, yeah, I'm gonna buy a house soon, man. I was already planning how me and the man were gonna like sit, how we're gonna position the PlayStation, and we're just gonna, you know what I mean? But there was one day I went to bed, I said, I'm not happy with this, man. I feel like I'm buying a property because I can, not because I love what I'm buying. And the kind of person I am, I want to fall in love with that property. I want to walk in every day, kick off my crocs and be like, yeah, this is mine. You know what I mean? And I wasn't getting that buzz. So I just called the agent and I just said, look, thank you for all your help, but I'm going to stop the process because it's nice, but it's not what I want. So that's where I am with it now. For someone who's been in the mortgage game for so long, I'm so chill when it comes to property ownership. I'm still eating rice and stew, mum and dad, and my like, listen, I'm easy, so I'm in no rush, as you can tell.
Yeah, I mean,
like,
honestly, I don't think you need to be in a rush, bro. I don't think. I think you have to get something that you're happy with at the end of the day, right?
I do have regrets sometimes. Well, I don't want to call them regrets, but I do sometimes wish I did things differently, because I remember a time before the Elizabeth line when HS2 was just announced. I remember being told, go and buy in this area, go and buy in that area. And I was just like, yeah. Well, they said our property's going to go up. And I'm just like, yeah, whatever, bro, man. Like, yeah, cool. And today, everything that I was told has actually come to pass. So sometimes I do wish that I made that plunge, but I'm a strong believer in everything and everyone has their timing for stuff. So
100.
I don't let it eat me up, but it's like sometimes take advantage of the opportunity when it arises.
Yeah, man. I mean, there's loads of opportunities, man. I think out there, I don't know if London has got as many opportunities as it's just everywhere is crazy,
if you
man.
want Help to Buy, if you love Help to Buy, you're living the dream. That's all London has to offer, really.
Would you consider outside of London though, like proper outside of
Depends
London?
how far. Are you talking up north?
Yeah, like Birmingham.
Oh no, man. You know where I've considered?
Where?
I've considered living in Manchester.
What? That's too far.
I love Manchester.
I like Manchester as an area, but it's far though.
I feel like because my sister lives there. One,
Okay.
my niece lives there as well.
Okay. When did she move out there?
She's been out there. My niece is 6 now, so she's been out for maybe 7 years.
Wow, she's loving
Yeah,
life.
so-
Cheaper, better standard of living.
You know, and once again, that whole property price comparison conversation we're having. You know, I had a conversation with one of my guys that lives over there. He's taken me to his new house that he just bought. New builds, big garage on the side, space for 2 cars in the drive, big garden, 4-bed, 360.
360.
So when I'm seeing stuff like that, I'm just like, I love this London a lot. I love it. But when I hear things like that, I'm just like,
Manchester's not far off though. Manchester's not far off. They're getting serious investment.
Yeah, bro. And what you will find is that a lot of corporate companies and head offices have actually moved over to Manchester.
Yeah.
So even on a commercial property and business level, they're realizing that it's cheaper to run their businesses from there.
Yeah.
You know, so it's something to think about. But would I move there like just tomorrow morning? Nah.
No, man, you love London too
London,
much, bro. I don't think
yeah.
you can ever leave London, man. It's too hard, bro.
Not really.
Nah, yeah, not really. Not really.
I might step 1 foot out. I gotta stay grounded.
Yeah, nah, I don't think I know myself.
Yeah.
If I'm leaving
Yeah.
London, it's to go abroad.
Okay.
Yeah, if I'm leaving, I'm going abroad. I'm not.
Well, where
there's
though?
no point.
Yeah, I would move out. There's only one
I'm
country
looking
I'd move to.
States. If I'm gonna move, because I might as well, right? Like, what's the point of me? Like, why am I moving to Manchester?
Bro,
Like,
it's funny. I was gonna mention it earlier when we were talking about how we're getting treated in this country, but I just thought it's irrelevant. But it's like I know quite a few people this year that have actually left the UK, and a lot of their answers. Well, one's gone to the States.
Okay.
One's gone to Canada.
Canada was on this.
Canada is in that. I don't know what's in Canada, but a lot of people from the UK are actually moving.
They're paying safer.
Oh, there you go then. You know, so and another guy told me that he moved to Indonesia.
Yeah, it's cheap.
Which I thought was very
Cheap.
random. But then when I looked it up, I was like, there's actually quite a decent percentage of Brits, not Brits, but people who come from the United Kingdom that move there.
Yeah.
So it's like these things are happening. It's just we don't see the people every day. So
Pay like £200 rent.
Yeah, like
you're living near the beach. Why would you not do
and
that?
even before
and get the same money you're getting here.
Yeah, and even before these energy bills stuff started going up, one of the guys said to me, now this guy, he moved to Dubai. He set up his business in Dubai. There was a big market for it. Now he's there. And he said to me, listen, the standard of living, that's the term he keeps on using. Every time he says it, he says the standard of living. So he's no longer just talking about the money, but he's talking about what you get for the money that you have. And I feel as if for a lot of people, that's a big thing, you know, especially when you have children and, you know, it changes. It changes your whole perspective.
It is, bro. Like, I mean, come on, man. We were just talking about $500,000 property. That's basically a box.
True. Mad.
That's crazy.
Mad.
That's crazy to me. And
Mad.
you know what I mean? I feel like there's only so much you can justify a location and say location, you can sacrifice, you know, your mental health, your standard of living for location.
Yeah.
I just don't think that's, do you know what I'm saying? I just don't think that's a fair.
Yeah.
It's never that deep, like you said.
They've tried to sell the transport. I don't know why London loves their transport links. They bang on about this transport link so much. Yes, it's great. We know you can get to West London. You can go from where I live in Norfolk to Stratford in however we know. But it's not enough to be increasing prices that much.
Nah, it's not
It
enough.
is not enough. Like,
Nowhere near.
there's a guy on my road that I did a bit of eavesdropping on his property sale because I wanted to know how much did this guy sell for. When I saw the number, I was gobsmacked. I said, for this. And even the people that bought it, they're even stripping down the whole property and renovating it. So I'm saying, like, what is actually going on? I really don't understand what's happening. It's just like things are just going up and up and up. And it's like, I don't know what the limit is now.
I feel like there's no limit, you know. I thought there was a limit with London until I saw New York. I was like, okay. Well, the limit is clearly New York because, yeah, London's expensive, but New York is another level. I can't remember. It was definitely a couple grand. The rent, they said that the average rent in New York, in Manhattan, is like a couple grand. Definitely. Higher? It's going up. It just keeps on going up. Yeah, it's mad. Like, so New York is expensive. Dubai, to be fair, I don't know how expensive Dubai is. Really.
The thing is, Dubai's not that expensive for property, bro. And this one thing I learned about Dubai, like, Atto knows me. So Atto knows Dubai. That's my house.
You love Dubai.
That's why I love
there. You should move there.
It's on top of my list, bro. Number one. And it's like buying property in Dubai. So, for example, argument's sake, I just said to you that you could get a studio flat in Ealing for 450k.
Yeah.
You can get that studio flat in Dubai, GBP equivalent, about 80, 90 grand. In actually a very nice area of Dubai as well. And what people forget about the UAE is that people have been to Dubai and they see everything looks nice, looks great. They're not finished. They're still building. If you look at certain places, you'll see like piles of sand where they're still going to build something. From the first time I went to Dubai, like, bro, bare sand. I'm not even joking, bro. Like, my Vapor Maxes, I came back with hella sand in my Vapor Maxes, bro. I'm not even going to lie to you. Even one of my Jordan 1s, the front bit's all like yellow, like, there's sand in that country, bro. Man. It's crazy. But it's like, they are still building on what they have. And even in the times that I came back and went back within a year, and there was a lot, and I stayed in the exact same hotel, same place. There was a lot there that wasn't there when I originally went. And that's what made me realize that these guys aren't done. We're enjoying what they have now, but they're not finished with us. Like, they're not finished, bro. And it's like, that's the thing I noticed about their buying property and stuff. It's not as expensive as London, but because you save your money there, you can spend your money on other things. Yeah. And that's the difference. Their tax also isn't the way ours is.
Yeah, it's low. You know? Pretty much they got no tax. I think I can't remember what.
Yeah, it's more like some a contribution or something like that. Because I remember I met someone who was a teacher here in the UK, went to Dubai to teach English, 40 grand salary. Now, 40 grand salary here, you're already thinking, I went to uni, so I've got my uni deduction, my NI, my student fund. By the time the pension comes out, I might get X amount. When she gave me the number she's earning, on top of that, they gave her a car. On top of that, they gave her an apartment to live in. So you're not paying rent, you're not paying car finance or anything like that. You're just paying for petrol and you're chopping life. So when that guy I mentioned earlier talked about the standard of living, those are the sort of things that he's talking about.
Wow, that's insane.
Yeah, there's a lot that we pay for here, bro.
Yeah.
Like, there's a lot we pay for.
Yeah, wow.
If you drive a certain car,
that's what I'm saying. We pay so much tax, high interest rates, high property. Like, what are we getting? What are we getting?
Getting it. Like, we're literally getting smoked every day.
There's no benefit. There's almost no benefits. At least with America, okay, cool. Yeah. Some of the property prices. It depends again where you move. You can go to somewhere that's going to be cheaper. Yeah. Salary's higher. That's the equalizer. So
you can afford more.
Exactly. The salary's higher, but in the UK there's no equalizer. It's not like there's no cheaper properties really unless you go up north. Yeah. And you have to go far up north. High interest rates, get taxed a lot. Salaries not that much.
National insurance, everything. If you went to uni, you're getting deducted. Yeah. So this is why there are a few people that are leaving and just saying, you know what, what's actually the point? Yeah. Like, I might as well be somewhere else. Yeah. You know, I know a guy that's recently also moved to Dubai to work. He's an estate agent. And he's just going to go out there for about 4 years and come back. He said, to get my money up. Yeah, listen, he's planned it out. He's really plotted it out very well,
smart.
you know, because he knows that on the salary he's getting, he'll make more from his money. He gets to keep more of his money. So it's one of those things, really.
Got to ponder for Dubai, man. So what you got planned next?
In terms of CK Talks money or
anything, everything.
Yeah, listen, I want to branch out a lot, man. Like I've done a lot in the space that I'm in, and let's give you a bit of a teaser. I'm stepping into spaces that I've never done before.
Okay.
So the next time people see me posting a lot of content, will be things that I've never done. It's very fresh. A lot of it is out of my comfort zone.
Okay. Wow.
But it's going to help, and it's going to add to my end goal, which is to share, spread knowledge, and bring awareness to things that I believe are important in relation to finances. You know, so I'm also considering jumping back into the mortgage game.
Okay.
So that's an exclusive for. See, I always give Atto the exclusives, boy. Like, I'm also considering that as well, because I just feel as if I miss it, man.
Yeah.
Like, it's been a couple of years now, and I still kept in touch with criteria, but sometimes I miss that, you know, client interaction, you know. So I've got that coming up as well, and yeah, like I said, there's some really good stuff coming up, man.
I'm looking forward to seeing what's going on. I know about some of it already, so obviously I can't say. And I think getting back into the mortgage game would be good. I think it's an interesting time right now, because you don't know if the property is going to crash. We got the 0% mortgage coming out. There might be other players that might try and copy it,
exactly.
You know.
And I'm really glad you said that, because what you always find, and I say always strongly with the mortgage market, is everyone has similar ideas. Everyone, as in the lenders, have similar ideas. But what they're doing is they're waiting for someone else to do it first to see how it goes. Yeah. Once they see it going well, they all do it. Because just one example, when the government got rid of the 95% mortgage guarantee about 2 years ago now, a lot of lenders said, oh yeah, that was a government scheme. We're not interested. There were very few lenders like Accord, Halifax, that said, now that that's gone, we're going to start lending at 95%. Yeah, the criteria is going to be this, but it's an option. Within about 3 to 4 months, most of the lenders on the market were offering that product. So this 100% mortgage product, it is possibly, if it goes right, could become the norm again.
Yeah.
Could, provided that it's done properly.
Yeah.
But we've seen how it's gone before, and we've only ever seen it go one way.
Yeah.
So I feel like that's why everyone's quite...
Yeah, we've got to be careful of it.
Yeah, and most people are quite pessimistic with it. They're thinking, but hold on, the last time we had this, look at how we ended up. But I guess it'll then be interesting to see how it does end up and what they do say. Yeah. So... It's gonna be an interesting time next year.
Have you got any final words for the listeners?
Yeah, listen, keep listening to Atto's thing, man. Like Atto's a serious guy. Atto knows his stuff. No, I know he's got some great stuff coming as well. So, but yeah, like if you don't follow me already, you've never heard of my page, feel free to lock in. If you have any questions about anything I've said today, feel free to hit me up and drop me a message. I do reply to DMs. I'm not gonna air you like some of these Instagram girls. Don't worry, like I've got you. But yeah, like, on a serious note, if you have any questions, I know sometimes I speak with a lot of like financial jargon and stuff like that. So feel free to hit me up, and yeah, CK Talks Money. That's it.
Thank you, bro, man. No, it's been great having you on the podcast, man. Thank you for blessing it. Third time now.
Third time.
You come to bless the listener. Yeah, you got the hat trick this time.
Where's that plaque that you said?
Don't worry, we'll get.
I'm not gonna bring it.
Don't worry, we'll allow you to have your speech as well at the end as well, man. Yeah. And we'll give you the hat trick ball as well.
Jeez, sign that one.
Thank you, listeners, for listening to this episode of the Takeoff Podcast, and yeah, we'll see you next week.
Peace.